Okay, so welcome to this session, everyone. I hope you guys have already watched the previous sessions and you guys don't have any questions. Now, what we have already completed, guys, we have already completed the Porter 5 forces, we have already completed the pestle, and we have already completed the external analysis. Now, moving on to the next topic that we have for the today's session is regarding the strategic analysis framework. So we have two framework over here. The very first one is the SFA framework, and today we will be also covering the SWOT analysis or the TOES analysis. Okay, so now what is the today's topic that we are going to cover? First of all, I'll just remove this part and we will be doing strategic analysis framework. Now, in strategic analysis framework, the very first framework that we'll be discussing today is the SFA framework. Now, what SFA framework is all about? First, we talked about strategic position. And when we were discussing onto the strategic position, we talked about three things. We talked about micro, macro, and internal factors. Correct. So one more point that I can add over here is regarding strategic position, which is again a part of only this topic. Let me put over here strategic position. Now, whenever we have to talk about the strategic position, we have to talk about, first of all, we have to talk about micro factors. Now, I hope you guys already know what are the micro factors. The industry factors are the micro factors. Then we have to talk about macro factors. Correct. And at the end, we have to talk about the internal factors. Now, when I talk about internal factors, what is that we have to talk about over here? Three things over here only. We have to talk about financial resources. We have to talk about human resource. And at the end, we have to talk about the goodwill of the company, to be honest. Goodwill and IT. Goodwill, IT. These are the four things that we have to consider when a question asks regarding the strategic positioning of a company. So these are the things which we have already covered. Now, micro factors, if we have to write the answer regarding the micro factors, what project or what model we can use? Guys, if we have to talk about the micro factors, which model is better to use? Please use your chat box or you can answer directly as well. If you have to talk about the micro factors, which model is good? Come on, guys, be quick. What will be your answer, everyone, if you have to talk about the micro factors? Always remember when I said pestle analysis, macro factor. The Porter 5 forces, micro factors. Always remember this thing. Don't forget the next time. Okay. Now, coming to the new topic that we are going to cover is regarding the comprehensive strategic management. Comprehensive strategic management. Now, first of all, we have the strategic analysis framework. Now, what is the strategic analysis framework talks about? Strategic analysis framework talks about a proposed strategy. Let's say we are thinking of investing somewhere. We are thinking of opening something new. We are thinking of acquiring a company. This is when we will start talking about the SFA framework. Now, what is SFA framework all about? It talks about suitability, feasibility, and acceptability. So it talks about three things: suitability, feasibility, and acceptability. Now, we have, if I talk about the understanding behind this thing, it is a comprehensive strategic analysis tool which is used specifically for evaluating potential acquisitions. Now, acquisitions can be there. It can be, you can say, takeover, investment, or anything. So it helps organization systematically assess whether an acquisition target is strategically appropriate, practically achievable, and financially viable. So three things over here as well. Now, what are these three things? If you consider over here, what are the three things, everyone? Strategically appropriate. When I'm talking about appropriate, we are talking about the suitability. Practically achievable. When I'm talking about practically achievability, I'm talking about the feasibility. And acceptability talks about financially viable. So these are the three things that we have to take care when we are talking about the SFA framework. Now, the question comes regarding when to use the FA framework, when we have to use the SFA framework, everyone. See, the primary trigger for this framework is to find out the put companies. If you are looking to acquire a company, when we are looking to acquire a company, we can say, okay, when analyzing potential company acquisitions, takeover, or investments, investment generally, investment in a new company. Investment in a new company or country, you can say like that. Okay. So when analyzing potential company acquisitions, after that, we have the next part. We have to look for keywords like acquire, acquisition, takeover. These are the keywords that we have to look for. If these keywords are there, we can say, okay, now we have to use SFA framework. Again, I'm telling you guys, there is no compulsion to use any of the framework or any of the models. 50 to 60% of the paper is your common sense based. If you feel like you don't need to use the framework, it's absolutely fine. So what is the primary trigger for over here? Look for the company acquisitions, takeovers. Now, generally mark allocation for this type of question is 15 marks due to the extensive analysis need. Now, when you're getting a 15-mark question, how much points you have to write? See, whenever you are writing down the points, always try to write down in the points first of all. Now, when you are writing down in the points, let's say you are at 15 marker question. So how many points you are supposed to write? You're supposed to write down 15 divided by 2, which is close to 7, 7.5 something. So write down 8 points. So whatever the total marks divided by 2 is the number of points that you are supposed to write down in the SBL examination. So ensure enough information is provided about both acquiring and target companies. This is the question structure. Now, detailed component analysis, everyone. Now, the very first thing that we have is suitability. So when I talk about the suitability part, we have to take care of one thing, which is evaluating strategic fit and external environment. So the thing when I talk about suitability, if I ask you a very simple question, if you have to consider something being suitable for you, what you will look? What is actually happening at my place? What is happening at that place? And what is happening at that company? You have to consider three things. Basically, you will be focusing on the external factors, strategic fit and external environment. So first of all, now SFA is all about a new investment. So when you are doing a new investment, everyone, there must be some reason why you are going or why you are moving from your company to another company, or why you are moving from your own country to another country. So first of all, talk about your home country analysis. Over here, you will be generally talking about the problems that are there, and problems, well, it's not compulsory that there will be problems, but you will be talking about your home country analysis. What you'll be doing? You'll be doing a home country analysis. Talk about the economic conditions, the political stability, the problems that you might be facing, then the legal laws, rules. If I talk about example like in India, we have a very high tax rate. Correct? We have a very high tax rate in India. So what actually happens? A lot of people move from India to Dubai. Why they move from India to Dubai? Because the simple reason is in Dubai there is no taxation. So home country analysis says the laws and the taxation system is very strict in India. That is why we come to the target country. Now target country is Dubai. Now you start analyzing that. Okay, these are the problems at my home country. What solutions is the target country providing me for that problems? Talk about the economic indicators, political and legal framework, market potential, entry barriers, cultural considerations, and the geographic advantages and challenges of the country. So these are the few things that you have to consider while writing down your answer, everyone. First of all, same things you are talking about in home country, you can do that. And generally, home country point is a bit on the negative side, but the target country point is a bit on the positive side. So there's a difference between on the home country side and the target country side. So whenever you'll be writing your answer, You have to analyze the points from the case, use your commercial acumen, and then write down your answer. Otherwise, you won't be getting any marks, right? So, target country, if you are moving to a target country, what are the problems that you might face? And what are the solutions that the target country is providing for the things that is actually happening in your home country? After that, you come to the third point, that is the target company analysis. Now, when I talk about the target company, now you are investing in a particular company, correct? You are not going to invest in a particular state. You are investing in a particular company of that country. So, when you are investing in a particular company, you have to talk about the company's market position. You have to talk about the industry's reputation. You have to talk about the competitive advantages, growth potential, strategic fit with acquiring company. This is important. Strategic fit with acquiring company. Why it is important, everyone? Because you are supposed to talk. You cannot go and buy out any company. You have to look for a company which actually fits into your company, right? If I give you example, let's say poor acquisition example. Um, Yahoo acquired one company. I'm not sure what the name was. Or one of the best example that we have, the acquisition of YouTube. Correct. The acquisition of YouTube by Google. One of the best acquisitions ever. Correct. So this is how you actually identify things, whether things are going out right or not. Okay. So these are the three things you have to take care of when you are discussing the suitability factor. Now, I hope this part is clear to all of you. The second part that comes in the act is the feasibility part. Suitability, you talk about why that particular industry is suitable or why that particular company is suitable, how you would prove that. Talk about your home country, talk about that target country, talk about that target company. Three things you have to talk about while writing down your answer. That is how you will be writing down the suitability part. So make headings. Headings are a very important part. It plays a very important part, everyone. So better to use headings so that your answer is well structured. Okay. Now after that we have feasibility. Feasibility may we focus on the can the company successfully execute the acquisition. Can the company successfully execute the acquisitions? And we talk about internal factors over here. Talk about internal factors. Now, what are the internal factors? We talk about human resource and expertise. Then we talk about financial resources. Just a second. Okay, human resource. Then we'll be talking about the financial resources. Now, financial resource, the money and the economy and all those basic part in the financial resources, everyone. Then third, we have the technology and the brand assessment. We will talk about the brand and the technology that the company is using. Now, it's not enough that you talk about these things. You can talk about a lot more things as well, but it is important that you talk about these three things. From what I have seen, that the exam sheets talk about. Exam sheet talks about the human resource, the expertise, the skills required. They talk about the financial resources and they talk about the technology and math. So generally, in the exam, they talk about these 3 to 4 things only, rather than talking about else structure which is not even required for your examination. Okay, so now first of all, let us start discussing on to the human resource and expertise. Now, when I talk about the human resource and the expertise, you are buying a new company. You are buying a new company. So will the managers that are sitting in your company, will they be able to run that company successfully or not? Talk about that. Talk about the management capabilities. Will the management successfully able to run the company or not? Talk about what are your previous acquisition experiences, whether your previous acquisitions are successful or not. Talk about international business management expertise. What are your expertise in managing the different businesses, international businesses? Is it that you have acquired companies but in your home country only, or have you acquired other companies that are working in a different countries? Talk about international management skills. After that, you can talk about the talent pool, talk about the training requirements, cultural integration capacity. These are the certain things that you need to talk about in the human resource and expertise. You can talk about the intellect. अरे यार, intellectual capacity. After that, when it comes to the fund analysis. Now, when I talk about the current financial resources, now when I talk about financial, it is very simple. If your company does not have money, do you really think you will be able to buy any company if you don't have money? Is it possible to buy a company if you don't have money? Guys, what do you think? Is it possible to buy a company if you don't have money?
No, sir.
Absolutely not. So first of all, you talk about whether the company has the financials or not. If the company does not have the financials, do they have any method in the pipeline through which they can raise the money? Talk about these things. So talk about the available funds analysis. In the available fund analysis, you'll be talking about what money do we have? Do we have funds to acquire another company? And while doing that, it is very important to take care of the gearing ratio. I'm highlighting this part as well. I'm sorry, not highlight. I'll just put it in the important part. So if over here, what is the important part in the human resource? You can talk about, although all the points are important. So let me remove these things. Otherwise, it will make it confusing for you guys. Okay. So talk about financial metrics like gearing ratios, liquidity ratios. So available fund analysis, you can do that. So this is like that. Now, you talk about the available fund analysis. Now, in available fund analysis, what you are supposed to do is, everyone, you're supposed to talk about current cash reserve and debt capacity, and whether you have access to the capital market. After that, when you talk about the financial metrics, you can talk about the gearing ratios, liquidity ratios. Gearing ratio is very important over here. And at the end, you can talk about the working capital requirements and the funding structure options. Now, working capital requirement, if you are buying a new company, you will have to take care of the company at the end. Correct. You have to take care of the company at the end. So whether you have the money to keep the business running on the day-to-day basis or not, you have to take care of that thing as well. So now these are the things that you'll be talking in the feasibility part in the financial resources. The very first resource is your human resource. The second resource that you have is the financial resources. Now financial resources mean two things is very important. First is, do you have the money? Second, you can talk about the ratios part. Ratios mein gearing ratio is very important. Now I hope this part is clear to all of you, everyone. You have a question over here? Okay, that's great. Now, third part, which is the technology and brand assessment. So, certain times we don't buy a company, we buy a brand. We are not looking to buy a company, we look to buy a brand. Correct. So, talk about, if you are buying a company, is it because of the new technology that the guys are that those guys are using? Is it because of the IT system integration that you want with them? Because if you remember, let's say a merger of Hero and Honda, correct? Hero was an Indian company and Honda was a foreign company. Honda has a very nice technology at that time, and Hero had the money and the market recognition in India. That's why they had a merger. So It could be the reason that they want a system integration, or is it because of the intellectual property? Basically, brand assessment you have to do. You have to talk about operational synergies, you can talk about the intellectual property considerations, brand portfolio management, and a lot more things. So you have to think, first of all, what is that you are supposed to write, and after that only you have to write. Now, suitability, feasibility, two things. Suitability may, again I'm revising, suitability may what you are supposed to do: home country analysis, target country analysis, and target company analysis. Then coming to the feasibility part, what you are supposed to do, everyone, you are supposed to write human resource and expertise, financial resources, and brand and technology. If you are able to write these three things, no one would cut your marks. Again, model is not compulsory, it's completely based on you. I would suggest using the models because it makes answer in a very proper format. Now, when we come to the acceptability, it is very simple because you have to think of only one thing, that is regarding the acceptance and approval. Now, acceptability talks about stakeholders approval and financial viability. Financial viability means whether you will be able to carry on the project. Okay, whether you will be able to carry on the project. So, first of all, you have to talk about the shareholders acceptance. Now, as per the shareholders acceptance, it has different approach. For a listed company, the approach will be different, and for a non-listed company or a family-owned business, it will be different. Now, let me tell you how. If it is a listed company, so you have to take approval from a number of shareholders that are there. If it is a listed company, you have to take care of number of stakeholders, number of shareholders. Correct. Then they will ask you for the NPV analysis. They will ask you for the ROI of the companies, impact on the share price, dividend expectations. A lot of questions will be coming from the shareholders. Now, why is that? Listed companies, there are number of shareholders, and we to answer all of them. That is the problem with the listed companies, because there are a number of people sitting there, so they will be asking you a number of questions. You have to answer them. That only then they will be ready to let you sell their company. Correct. But if it was a family owned business, in a family owned business, selling a business is very easy. So over here, approval, or you can say acceptability, is tough. Over now, in a family owned business, simple approval process, because owned by family only. So acceptability is easy. Correct. Because it is owned by the family, so the acceptability is easy, because they will be ready to let you sell the company, because they are there, they are there in the procedure, and they are the one, the owners as well. Now, you notice in a family owned business, the directors and the owners are generally the same people. I hope you are getting my point. So over here, acceptability is tough, but over there, acceptability becomes easy because owned by family only. So very less chances that people obligate your future plans. So it's a simple approval process, direct board approval usually sufficient. Focus on family interest alignment. So it becomes very easy over there. First part is the shareholder approval. Now, shareholder acceptance and approval is done. Coming to the second part, which is cultural differences analysis. Now, cultural differences analysis talk about organizational cultural comparison. Whether the company, since the company is based onto a new country, definitely there will be a different cultural. Now, talk about that. Talk about the culture of your country and the culture of the new company that you are buying, which is in a new country. Organizational cultural comparison you can do. You can talk about the management style differences. You can talk about the working practices, communication pattern, integration challenges, management requirements. Now, there is a question in your mind, I understand. Sir, are we supposed, what we are supposed to write? Are we just supposed to write down the points and that's it? Absolutely, this is what you are supposed to write. You are not required to give a conclusion unless or until they ask you to do so. I hope you are getting my point. You are not supposed to write down a conclusion. I must have given it somewhere. Okay, I'll write it down. You're not supposed to give a conclusion unless or until they clearly ask you for a conclusion. Okay, you don't need to give anything. You don't need to give. You just need to make a comparison. You just need to write down an answer in such a manner that it sounds professional. Okay, so cultural differences analysis will be there. Talk about that. See what is the culture in your home country and what is the culture in the new target country. What is the difference in the management styles that your country is doing and the style that they are following in the target company. What are the working practices? Like I might be working for 7 hours, and if I go to the Dubai company in Dubai, they might be working for 5 hours. In Dubai, we do not have the week off on Sunday. We have the week off on Saturday because they start their day from Sunday only. So talk about these things. After that, talk about the financial projection analysis. Now, when I talk about the financial projection analysis, guys, I am talking about the future projections. What will happen in the future? Now, what regarding share price, the increase in revenue, the saving of cost, the change in the profit levels, all these things you have to talk about. You are buying, you are putting a lot of investment. How much time will it take to get your money back? Over here, you will be using certain FM concepts regarding, you can talk about payback period, you can talk about the NPV analysis, cash flow forecast, a lot of things you can use. Okay, so these are certain things that you can use while writing down your answers, which will improve the credibility because you are talking about these things. Now, there will be certain items given in the case. If you can just use the numbers which are given in the case and put them in your answer, it will enhance your answer. Let's say there is given that you are investing 5 lakh rupees and you will be getting like 1 lakh every year. So you can talk about the payback period, a simple payback period which is of 5 years. Correct. So these are the certain things that you are supposed to write down, everyone. Now there is one alternative approach to the acquisition analysis. I'll just put down one point over here as a note. There is no requirement. So what is the requirement says? There is no requirement to give any conclusion unless or until you are asked to do so. Okay, so just to remember this part, there's no requirement to give any conclusion unless or until you are asked to do so. So this is one important note. Now there is one alternative approach, everyone. There is one alternative approach to the acquisition style, acquisition analysis. Now what is this approach all about? No. See, certain times what happens is students feel that this SFA framework is very complex. Here I'm supposed to talk about a lot of things. Now, what are those lot of things? I hope you guys remember. In S, that is your uh, the word S stands for your suitability. Suitability, you talk about three things: home country analysis, target country analysis, target company analysis. Then you come to the feasibility part. In feasibility, you talk about resource, internal resources, human resource, financial resource, brand, and technology. Then coming to the acceptability part. In acceptability, you talk about shareholder acceptance, first of all. Then you talk about the cultural differences, and then you talk about the financial projection and analysis. Now, one important note that there is no requirement to give any conclusion unless or until you are asked to do so. Now, I hope this thing makes a lot of things clear to all of you. Now, if you feel that SFA is getting a lot of is getting complicated for you, then what you are supposed to do? If you feel that SFA is getting complicated, then what you are supposed to do, everyone? Because certain times it happens with students that they feel that I cannot do that. I cannot do with the SFA. SFA part is too tough for me. Okay. So what you are supposed to do in that situation? You can simply go with three things. you can simply use three pillar approach. First is external factors, then internal factors, and at the end financial analysis. Even if you do these three things, you will get the full marks. Okay. External factors, again, things will be same. You talk about market condition, industry analysis, competitive landscape, regulatory environment, certain basic investment ideas regarding the external factors. Then you come to the internal factors part. Now, when I talk about the internal factors, everyone, you over here will be talking about things like company capabilities, resources, strategic fit, integration capacity, a lot of things you can talk about. Over here in the internal factors, guys, you can talk about the over here you can talk about culture as well. You can talk about culture, management style. All these things will be the part of this area only. Okay, now this is something that this is how you will be writing down your answers in order to make sure you have a proper format. Again, model is not compulsory, but suggested to use it because it looks more professional in that manner, and you will be getting your communication marks, which is a professional marks, everyone. Because professional marks, something that you will be getting for the next four papers, which is your static professional papers. Okay, so now when we come to the financial analysis part, we'll be talking about the ROI calculations, risk assessment, funding requirement, cost benefit analysis. Again, a lot of things you can do NPV over here. You can do NPV, you can do payback. Okay, a lot of things you can do over here as well, depending on how what are the numbers that are given in the question and how you want to write down in your answer. So this is regarding the SFA framework, everyone. SFA framework, we have two approaches. Either, sorry, the very first thing that we have is regarding the where is that? Where is that? The very first thing is regarding the strategic analysis framework. So when we have a strategic analysis framework, everyone, increase the so if we are looking for a proposed investment or something, we can go with the when we have to use SFA when we are looking for a proposed investment, first of all. Now, there are two methods to do that. One is the SFA framework method. Now, as per the SFA framework method, everyone, what we are supposed to do, I'm moving this line. Okay. SFA framework. SFA framework may we have like three things: suitability, feasibility, and acceptability. After that, if you feel that it is getting very complex, I can't write it in this manner, you can talk about three things, which are internal factors, external factors, and financial analysis. Even if you do like this, your answer will be correct. I think that now things are clear to you, and I guess this much is enough for your SFA framework. Always remember when to use the SFA framework.